Hey everybody, it's great to see you again. So, getting a lot of questions lately, basically, are we there yet? Over and over, are we there yet? Are we there yet? It's like being on the old road trip. The there is a bottom in the equity markets, or at least a stabilization in stock prices. And our thinking is not yet. Maybe not quite 20 minutes, but not yet. So we're still very much in a hunker down or duck and cover mode. And so this is what happens in a bear market, right? A bear market is not a market that's just down every day, day in and day out. You still have rallies in a bear market, and it can be pretty insidious, pretty tempting, right? Where, look, we know we need to be invested for the long run, and it's hard. You're waiting for that moment when it's clear to get back in the water, and so you see these big rallies within a bear market, and you think, okay, that's got to be it. The bottom's in, and it's just smooth sailing from here. So frankly, we don't think we're there yet, as I said before. And why don't we think we're there yet? It's a couple of things. The economy's still running pretty strong from all the data we've seen. Yes, you're seeing a cooling off in inflation, where it went from over 8 to, let's call it, the high 7s recently. You still have very low unemployment rates, so people are having a relatively easy time finding a job. Anecdotally, yes, we're starting to hear of some layoffs, but that's a developing situation. Another thing that we look at is like the shape of the yield curve. So generally speaking, you would expect that to invest in a longer term bond, you'd be paid more than you were to invest in a shorter term bond. And that's not what you're seeing in treasuries right now. If you look at the 2-year versus the 10-year treasury, you're actually getting a higher yield to invest in the 2-year than you are in the 10-year. And that is not normal bond market behavior. What that tells you is that bond buyers are very uneasy about the future of the economy, at least in that 2-year period. The third thing, and it's harder to put a fine point on this, is really sentiment, right? If you know me and you know us, we're big fans of Warren Buffett, and he's got a great saying that you want to be fearful when others are greedy and greedy when others are fearful. And again, anecdotally, talking to people, there's a lot of sense that this could be a good entry point into the market, or that there are bargains to be had. And sort of by definition, that bargain hunting, seeking behavior is not fear-based, it's actually greed-based. So we haven't seen really the needle tip over into fear, where we see capitulation in the markets, where people throw their arms up and you're like, you know what, I'm done with this, I'm selling all my stocks and I don't want to see this again. We're not there yet. And so those are some of the things that really need to come together. A change in the unemployment inflation dynamic, a change in the shape of the yield curve, a change in people's sentiment in terms of how they feel about investing in stocks. Once we see real movement on those three things, and probably some others, we'll start to feel more comfortable that the bottom is in. And until then, we remain really defensively positioned. Equity allocations could be 30% or lower. We've got a fair amount in, you could call it the bond market or fixed income, but it's really floating rate exposure. We have another quarter of a portfolio allocated to hedge fund strategies, and the remainder sort of in real assets. So for people that are out there, if you agree with this sort of thinking, we've been giving an opportunity to right-size the risk in your portfolio, and you can take it. If you've already done that, I would encourage you to continue to hunker down, duck and cover, if you will, and continue to wait for the storm to pass. So I want to thank you, as always, for taking a few minutes out of your day. We'll see you again soon. Thanks so much for watching. As always, make sure to rate, review, and subscribe. You can also find more content on our Omnia Family Wealth YouTube page, or check out our latest videos by clicking on these links. Thanks so much for watching. As always, make sure to rate, review, and subscribe. You can also find more content on our Omnia Family Wealth YouTube page, or check out our latest videos by clicking on these links.